So we haven't done a mid-market commentary in a few days. Market's been, in my definition, relatively quiet. There's been movement, but certainly not the level of volatility that we look for. So um, today is Tuesday, August 23rd, and let's take a look at what's going on. So we're going to start with NDX here. We're on a one-year daily chart. And it's obvious. I mean, it's so obvious when you take a step back and just evaluate where we are relative to where we were, that the low of the previous declining pattern, the last low was on the 27th of June. Now, we all know that because we've looked at this before, but when I come to my charts each day and I do my analysis, I go back and just highlight in my thinking those key points so that I'm reminded each day that I'm looking at my charts what the starting point is and perhaps what the ending point is when we start to see that develop. So the first bar in the current rising pattern that we're in was on June 28th. So today's August 23rd. We're approaching 2 months that we've been in this rising pattern. And you can see that it moved pretty significantly to the upside. Ultimately, on the 15th of August, forming a new all-time high on NDX at 4837.67. So that broke above the previous all-time high, which was in March of 2000, just before the tech bubble burst, and we saw NDX move from its 4,800 level down to, I think it was 700 that we got down to. But we'll go back and look at that in just a minute. The point here is that you can see this very steep climb, a bit more gradual climb. This is like climbing the side of a mountain. You know, you're scaling the low hills first pretty strongly, get into some elevation, slow down a bit. So in my view of this pattern, we've not had what I would call any type of significant retracement. I mean, there's practically no retracement at all in the first several days. Then we climbed higher. There was really no retracement at all. And I'm not counting retracement as the range of an individual day. I'm really looking for retracement as an individual day that moved well below the prior series of days. So the last retracement we had, it appears, was on the 2nd of August, and then we continue to climb. Had a little bit of a retracement, just a little bit, on the 16th and 17th of August. But for the most part, if you take a look at the time period from, I'd say, on or about the 5th of August, we've been pretty flat. We've been pretty flat in that range. Now, that's a pretty, in my opinion, extended period of time to be in a flat, tight range. We've got some lows, we've got some highs, and it was in that range that we hit a new all-time high. It looked like we might have tried to take out that new all-time high today, but we didn't make it. The new all-time high was at 4837.67. Today's high is 4836.44. So we came up just a little bit short. Now, this, in my opinion, folks, still is starting to form a pattern of weakness. But I want to be very clear that this macro view of your charts is not something that you want to trade off of. It's not something that I want to immediately take a downward bias trade because we formed a new all-time high. I want to stack all of that data on my desk and evaluate it and keep in mind where we are trading relative to all-time highs, relative to support and resistance, relative to the Bollinger Bands, etc., and what other technical indicators we may see that point to a move higher or a move lower. I want to take a look at all those things, but I'm always then going to come back to my Able Trend charts, and I'm going to make my actual trade entry decisions based on the Able Trend signals. This provides, this bar chart evaluation provides a macro view for me personally. Now, that may not work for everybody, But that's the way I've traded, and long before AbleTrend, I traded exclusively off my bar charts, and there's a comfort level in terms of recognizing patterns and understanding what's happening. I have no emotion involved in evaluating my bar charts because I'm not anxiously thinking about putting on a trade. I'm just taking in data so that when I go look at my AbleTrend charts, which are going to provide my signals for me, I know that if there's a signal trading telling me to go long, to take a rising bias trade, I'm not necessarily going to be hesitant to take that trade. I just want to structure the trade in a way that if it reverses on me, I can still modify it to win. And it may reverse on me because I know that the macro view is showing me some pretty strong indications of us perhaps reaching or being near a top. So here are the things that I see. We have multiple oops patterns, and I won't go through all of them. You can identify them on your own on your charts, but the lowest oops pattern that we would still need to satisfy is would require the index to trade back down to 42.91.43. 42.91.43. So that would satisfy the lowest oops in this rising sequence. But there's another one here, there's another one here, there's another one here. So there are a variety of oops patterns. There's another one here. There was one here between yesterday and today, but just in the last few minutes that actually got satisfied on this slightly, this small move down that we saw on NDX. So that's one thing. You've got multiple oops patterns in a range where we know that oops patterns will be satisfied approximately 93% of the time. So there's a high probability that eventually the index is going to trade back down to that price point of 42.91. There's a 93% based on historical experience, 93% probability that it's going to trade back down to that level. So I personally like that because when we start to see that move and we have signals to go short on AbleTrend, that's when you take a very strong position of confidence that we're trading with the trend and there's a lot of room to potentially move in that trend. So that's one thing. And then I see us trading at this area of resistance. Now we've been tracking this area of resistance for quite some time. Comes across a high back in November of 2015, comes across a series of lows here back in early February, and then of course we hit the high again, the most recent high on the 15th of August. And although we didn't take out that high, we traded right up to that level of resistance today and then fell off away from it. So I still believe in my evaluation that this level of resistance, which is highlighted in red, is a valid level of resistance. And then at least as of right now, but we still have another 3 hours in the market day, but as of right now, we are forming a bearish divergent bar where the high today is higher than yesterday's high and the close or the current price of the index is in the bottom 50% of today's range. So resistance, long-term resistance, trading close to the upper Bollinger Bands with multiple oops patterns and a potential bearish divergence today are all indicators that collectively tell us there is a increasing likelihood of some sort of a decline. Now that decline may not come for another 2 weeks, 2 months. I don't know when it will decline. I don't know when that next cycle down will start. But what I do know is that from trading the indexes for many, many years, the longer that rising cycle lasts, the closer we are to a declining time period. And that's not much different than what you hear Michael talk about frequently when we're looking at the AbleTrend charts. He may be looking at a signal to go long or signal to go short on AbleTrend on a 3-9 minute chart, and it might not be a strong signal, but looks like a good signal. And he will tell you that we've been in the trend for 2 hours. Well, we know that somewhere around an hour and a half to 2 hours is about when the short-term trend tends to reverse. So you want to take that into consideration. Again, none of these things are absolutely in stone, but they are considerations that help influence the trades that we take. So what I want to do now, since we talked about those technical indicators, is put some of our other measurements on here and just see if there are other um, technical signals that align with all of the things that we just identified. Trading at resistance is a declining bias indication. Multiple oops patterns to be satisfied is a declining bias indication. Trading right at the upper Bollinger Band is a declining bias indication. Trading at or near the all-time high of the index is a declining bias indicator. We also have the AO, and the AO looks like it's showing for the last 1, 2, 3, 4, 5, 6, 7 days um, declining momentum. Well, when you have weaker momentum, eventually the price is going to weaken because you can't sustain continued rising price forever on weaker and weaker momentum. And we've seen weakening momentum since the 12th of August. Now, the other interesting thing is you've got pretty strong decline in the momentum. So if you put a trend line on that, and then at the same time, in the same time period, put a trend line on price, price has pretty much been flat, maybe a slight uptick, but mostly flat. So you've got this very strong divergence between price and momentum. Momentum is going to lead the price eventually because you can't continue to have um, uh, price climbing higher and higher while momentum is waning and getting weaker and weaker. So my takeaway on NDX, having not really thoroughly studied the index here for the last week or so, is we are now seeing a fairly consistent stacking of multiple indicators, a consensus of multiple indicators that are all pointing to the same answer, and that is we're probably getting closer to the next declining cycle. And the next declining cycle, like I said, could start tomorrow, 2 weeks from now, or 2 months from now. I do think that the market itself is being influenced by the presidential election here in the United States, that we might not see, maybe, we might not see significant activity until after the election. So we've got some time to stay in a range. I could be wrong about that, but I wouldn't be surprised if we traded in a fairly tight range until there's more certainty. One of the things that traders and markets don't like is uncertainty. They tend to hold back when there is uncertainty or exercise fear when there's uncertainty. And the uncertainty right now is who's going to be the next president? What are those policies going to mean for the economy of the United States and our place in the world? And that creates a fair degree of uncertainty. So that's NDX. Let me take a look at SPX. All right. First thing I see, my eye always gravitates to the AO first when I have the other studies in place. And the first thing I see is that we have a very steep decline in momentum on SPX. And this decline on SPX has actually been in place since the 21st of July. Now we had a 3-day period here where we saw a little bit of an increase in momentum, but this is what forms a Twin Peaks pattern where you have rising momentum followed by declining momentum, followed by rising momentum, followed by declining momentum. But this second peak is much smaller than the previous peak which means that overall you still have declining momentum. Now you don't even have to put a trend line on the chart to see that almost exactly starting at the time that we began this declining momentum, SPX really flattened out, and for all practical purposes is traded in a very, very tight range, almost entirely sideways, I would say, since the 14th of July. So that's quite an extensive time period to be in a very tight, flat range. Now let's take the other studies off, and you can see pretty clearly we traded sideways right here, had just a little bit of a dip, climbed right back up to a little bit higher sideways pattern than the previous sideways pattern. But for all practical purposes, we've been trading in that sideways pattern. This high on the 15th of August was a new all-time high for SPX, 2193.81. We moved up to 2193.42 today, so we came within 39 cents of the all-time high, but didn't break out of it. Let me just double check those numbers. 2193.81, 2193.42, so 39 cents off of the all-time high. So it looks like we tried, like on NDX, we tried to possibly take that out, didn't happen, formed a oops pattern between yesterday and today that still needs to be satisfied. It needs to trade back down to 2185.15, where the low today is 2187.68. So still need to trade down a couple of points to satisfy that oops. So the oops pattern kind of acts like a magnet. It doesn't pull it immediately, and 7% of the time in our experiences, it doesn't pull it at all. But I wouldn't be surprised to see this oops pattern satisfied, if not today, then in the next couple of days. And we are seeing a bearish divergent bar forming right now. Still have to wait till the end of the day to see whether or not that stays as a bearish divergent. Higher high than yesterday's high and a close in the bottom half of today's trading range. We have the lowest oops pattern that needs to be satisfied on SPX would take the index back down to 2036.09, 2036.09, so about 152 points below where we're currently trading. And you can see where this line of resistance is that we had previously measured. We're still trading right along that line of resistance. Yeah, we've moved a little bit above it. I'm going to pull back to a 2-year view here. We've moved a little bit above it, but that's not a big deal. You can still see that we're trading right in line with that resistance. So I'm going to pop that up to that new all-time high plus the high that we hit today. Capture that, make sure that my level of support is right at my lowest lows. So what we're doing is we're looking back into May of last year where we hit a level of resistance. Even before that, there was a level of resistance. It was a natural level of resistance formed by the market because it was a price activity where the market moved up to a high and then moved away from it. There was another one of those, and that's the one in late May that we are attaching to the two levels of resistance that we formed now. And then you can see all the trade activity in between. You know, the range of SPX in that time period has been 361 points. That's a pretty healthy range for this index. If we extend out, we can see that we could possibly continue to trade along this level of resistance, maybe, or we could break above it. It's going to have a harder time. I'm not going to say it won't happen, but it's going to have a harder time breaking above because we would also need then to be breaking above the 2 and or 3 standard deviation Bollinger Bands. And it's just going to have a more and more difficult time doing that as momentum continues to decline, as evidenced by the AO. So in my personal view, SPX is very consistent with NDX, where the deck is starting to stack towards weakness. Deck is starting to stack towards declining bias. Let's take a look at RUT, and then we'll pick one of our stocks to look at also. RUT, I think, is a pretty consistent pattern with NDX and SPX. We're trading just right at a level of resistance. I'm going to just modify that ever so slightly to capture that level of resistance and come off of these two levels of resistance. So all three indexes are trading at a level of resistance that, although we've modified it just slightly to capture the most recent price activity, it's consistent with being tied back to levels of resistance, natural highs that the market formed within the past 12 to 18 months. So that gives, in my opinion, some validity to the signals. Now, what's also interesting about RUT, and this was not the case on the other two indexes, but as of right now, we're forming a Bollinger Band snap on the daily chart. So the Bollinger Band snap pattern on the daily bar combined with trading at a level of resistance. And do we have an oops pattern to satisfy? Those two things by themselves are a pretty strong indication of potential decline. Oops pattern. I don't see one quickly in here. There may be one, but I don't see one in here. There certainly is not a ultimate oops pattern to be satisfied like there is on NDX and SPX. Well, let's take a look at the studies. And there you go. We've got a very consistent declining Twin Peaks pattern right here. 43.65, 43.10. So as of the bar that formed on July 19th, we've been in a declining Twin Peaks pattern. So momentum has been declining, and during that same period of time, price has been rising. That forms that angulation, the divergence between price and momentum, and eventually that price will snap back lower. If I look at MACD, stochastics, and moving averages, the last time we had a set of three breakout signals that all aligned was back here, where we've got breakout signal to the downside on the moving average, breakout signal on the down to the downside on stochastics, and a breakout signal to the downside on MACD. So those three are in agreement, and when they are, that is another strong technical indication. So my summary of all three indexes is it's just a matter of time. I mean, logically speaking, you would expect that they're going to decline at some point because we've been in a pretty long, extended rising cycle. And we know that after a rising cycle, there's always a declining cycle. So that's just based on experience and just kind of logically concluding what happens after things go up, they go down. What happens after things go down, they go up. But how close we are to that is evidenced by the series of technical signals that I'm seeing. Does that mean it's going to happen imminently? Would you take a trade based on this? I, first of all, can't say it's going to happen imminently, and I wouldn't take a trade based on this. If I were trading strictly based on my bar charts, which I'm not, I would wait until we saw a move down, a move up, a move down, and a move back up. I want two tops and two bottoms that form what we could identify as a declining cycle. And then I would feel as though we may be in the next declining pattern. But pay attention to this, folks, because the next declining pattern may do nothing more than take us down to support of the rising cycle we've been in really since February 11th. If it takes us down to that level of support, then we'd need to see it break below that support to know that we're actually in a declining trend. Right now, the trend is to the upside. The next cycle will be to the downside, but we don't know yet whether that's going to break below the trend or whether it will stall at support and then turn and take us higher. So even if we, let's go out to say the middle of September, and let's say we have a cycle that forms and takes us down to support, that would take RUT down to around the 1153 range, so almost 100 points below where we're currently trading. I want to take a look at one stock. I want to take a look at Priceline. I've got a position on Priceline, so I'm just kind of curious what the chart is telling us. AO is showing some weakness off of its peak on the 11th of August, declining kind of flat. And today it's actually showing a little bit of strength and momentum, but if you look at AO as a trend, you'll still see there is a declining trend in momentum. And during that same period of time, we have rising price. In fact, pretty strong rising price. So that's pretty significant divergence between momentum and price. So that pattern will eventually pull the price back lower. The thing I like about Priceline is once it starts moving, it can move significantly. I mean, look back at some of the individual days where we've had huge ranges, 100-point ranges within the day. So let's see here. What else do I see on Priceline on the daily chart? We hit a high. We've been pretty much declining for the last 3 days after we hit that high at 1449.90. Just looking at an all pattern to see we hit 1449.90. Yeah, so we're not trading at all-time highs, we're trading near all-time highs. The all-time high, let me just grab it here, is 1476.52. 1476.52, and we traded up to 1449.90 just in the last few days. So we're very close to an all-time high. But what's interesting is look at momentum when you take a very large step back and look at this on a monthly view. The monthly bars of momentum are showing a very significant decline in momentum. I think that in the big picture is going to be very telling. We're just going to have to wait and see what actually happens. But I have two positions on Priceline. One of them is a managed position with a calendar spread, and one of them is just a long put I own that has an October expiration. So those expirations, September and October, give me a lot of time on those trades. So there's no anxiousness about those trades. And then we do have one other stock position here on Google. We're just a little bit behind on that position, but you can see here that there's been a declining pattern right here on Google, and momentum has been significantly declining, and there are 3 consistent breakouts to the downside on the MACD, stochastics, and the moving average. So here's my overall summary. It's based on trading for over 30 years, having studied these bar charts for a long number of years. There is a very strong likelihood that we're getting closer to the next down cycle. When your stocks are all showing trading at levels of resistance and your indexes are all showing that, there's eventually going to be something that's going to crack, something that's going to point us in the opposite direction. But now I revert back to the Able Trend charts. And Michael, if we could go back to you and start with the longer term, maybe the 120 daily, whatever your longest time period is that you have. I'd just like to, maybe we don't need to do it on all of the indexes, but I'd like to look at NDX and see what they're telling us. So on NDX, you've got the 120 daily, it's still double stacked to the upside, right?
Yeah, yes, it is. But
Y-
just really quick, and
Yeah,
we talked about this right before it started, and you can see the sell signal came in here on the 3 minute chart. We were talking about that before you started recording,
yes.
and we said we've been in 2 hours. Well, look what happened while you were talking
Hmm.
on the bar charts. Got a buy signal to the
Shifted to a
upside.
buy
So
signal. Yeah.
yeah,
Mm.
so you really got to pay attention to that. That's good stuff
So,
right there.
so there, I mean, in fairness, Michael, there was a trade that you missed out on, but
Yeah,
you made a
that's right.
decision not to get into it because it didn't look like a real strong signal.
No,
And the bottom line is you might have missed out on the trade, but it's still choppy in there. And
oh, it is. It
yeah,
is. Yes.
it wasn't a clear pattern to take that trade.
No, it was
So
not.
so let's just leave it on your four box grid.
Okay.
The in the lower right, the 120 daily, we're double stacked to the upside. The
Yes.
upper right, the 60, 180, we're double
Yes.
stacked to the upside. And in the
Yes.
lower left, the 3090,
We're just yeah.
we're
We only
single
have
stacked to the
that's basically
upside.
yes.
Yeah. And so it's only when we get down to the 3 9 minute chart that you see red, you see any kind of weakness, but that's nothing more than a cycle. And it's the cycle that you frequently highlight as lasting an hour and a half to 2 hours. And
Yes.
then what happens? We get a buy signal
That's right.
and we start to see some movement to the upside. So
Yes.
after my bar chart review, and this is my personal approach, I come back to these able trend charts, and the point in time where I would feel confident, and we joke about this, but so I'm going to use the expression to emphasize the point, but to bet the farm on a trade. Of course, we know we'd never do that, but the point in time that I would probably want to step up and insert myself into a strong declining bias position is when we start to see these longer time periods on able trend flash sell signals,
Yes.
even if it's not validated yet. That will be like the crumbling. One piece of mortar crumbles first, and then you see the others start to follow. I'm seeing the setup for it on the bar charts. We just haven't seen any confirmation of it yet on Able Trend. And I've got a couple of positions I'm going to manage, Michael, but I've taken no action on them yet because I am very conscious of my capital at all times. And I'm frankly wanting to manage some downward bias trades that I'm behind on. And I'm going to wait until I see confirmation, not just on my bar charts, but confirmation on at least one or two of the longer time periods on Able Trend.
That's right.
Can we just take a quick look at Priceline?
Yeah, we can, and I want to show you another chart too. We'll go to price line, but I want to show you something else I find interesting. So we'll go to price line. So here
Sure.
you go.
Now Priceline is interesting to me because on the 515 and on stocks, I tend to look at 515 versus indexes 39 primarily. We seem to be dancing back and forth across that 15-minute support. It's almost to me like support's not holding, but we haven't stopped printing it yet. In fact, look, the blue support dot just came on the chart.
Yeah. Yes.
Um, so that's kind of an iffy proposition there because we're trading back and forth across support, but we also have resistance printing above us that's stair stepping lower. So again, I've got a price line position. It's got an October expiration. I feel no urgency or anxiousness to do anything with it right now. Um, and I'm waiting for a clearer signal that would indicate to me a trend. And the 3090 looks like we're stair stepping lower, just kind of a weak weak indication of a declining trend, which conflicts with the 120 daily, where
Hmm.
um, it's not double stacked anymore. Well, it is double stacked, I guess. It's hidden
Well,
behind
no.
the bar.
Yeah. Well, yeah, it is. Yes.
Yeah. So today, and I do my evaluation each day when I'm trading to decide, is today the day I want to take action? And today is not a day I want to take action on any of the indexes or stocks that I've evaluated. because I don't see yet any signal telling me now is the best time to take action. And I've decided, and then the last week I shared with you, I took a little time away from trading, but I've decided not to, at least today, open any new positions because I'm really monitoring the existing positions that I have. It doesn't mean there aren't great signals out there to take some new positions, but you need to weigh the amount of capital that you want to put in versus the number of positions that you have that you're focused on, and that's a different decision for each individual trader. So I know you're trading actively on taking some day trades, Michael, but I'm not taking
Yes.
any new positions right now.
Yes, sir.
What did you want to show me, and then we'll wrap it up here.
The Russell. I mean, that thing just defies logic sometimes. But these signals had just these wasn't on here before did start to 1 o'clock or
Hmm.
1:20. But you can see that you can if you just glance that chart, forget this 3 minute right now. You got to pay attention to that. But that wasn't there a minute ago. What do you
Right.
see? You see
Or
upward.
double stack to the upside.
That's all you see. Is
That's right.
it's going to continue to go higher? It looks like it is. I mean, we're 1250. I mean, I wouldn't have guessed that yesterday by no means. But if you look
And,
at the chart, you got to say, yeah, we could go there.
well, that's exactly what Abel Trend's telling us, is that we may continue to go higher, which means that the next time I do a mid-market summary and look at bar charts, I may be adjusting and modifying my channel lines because I'm going to continue to do that until we identify where the natural level of resistance is on
Yes,
that particular index.
that's right.
Yeah, that's interesting.
Yeah, I found that. Yeah.
So the market really is pretty flat. Um, you're going to have periods of time in the market where it just feels like it's exciting. There's lots of activity. It's almost an adrenaline rush. But that's not why we're here. I mean, I mean, that's not why we should be here. We're really here to make thoughtful decisions based on good quality signals so that we can make money. And if we have a series of days where we don't make any money, the way I look at that, and maybe it's just my positive outlook on things, which I try to have, if we have a series of days where we don't make any money, I got to believe there's going to be a series of days coming in the very near future that we're going to just clean up. There's going to be opportunities to make a boatload of money. I go back to my favorite Friday in January, Michael, and in my live trading room account on that one particular Friday, we made $17,000 in a
Yeah,
single
we
day.
did. Yes, we did.
So sometimes it's difficult for a trader to remember beyond yesterday. I know when I'm trading actively, I have a hard time remembering last hour what I traded. But I like to go back and remind myself of those days because there are other days, like for me in the last several days, where I've not really made anything, and that's by a conscious choice. There's a balance here. You're going to have a
Yes.
period of time where you're not really making anything, and it's just a natural cycle of
Yes.
your trading. But if I had another day like a $17,000 day, it would certainly make up for the last week of not making anything, don't you think?
Yes, it would. Yes, sir.
So that's any other thoughts, Michael, before we close it out?
No, I think that's it. I mean, I just think we're going to move higher, looks like to me. So we'll see.
Okay. Um, well, I hope everybody's having a great time trading. It might be a little slower and more mundane than our normal, but it's a good time, seriously, to step away and go take your boat out on the lake or get on the golf course or whatever you choose to do. Just go have fun and come back when there's some activity. It doesn't mean that you have to stay away entirely, but you know, make your life fun and make trading part of what you do, not the entirety of what you do. I was just glad I had an opportunity in the last several days to take some time away and work on some other things and go enjoy some time with my family and didn't, in my opinion, really miss out on anything. So I'm looking forward to the next downward cycle, the next strong downward cycle. And if you'd like to make that happen today, Michael, that's fine with me. I think I think you could put a vote in to the market makers, and I think they'd listen to you. Okay, that's it, folks. Have a great rest of your trading day.